some people are suggesting that we saw the rally that we were going to see that we got at the end of December, particularly for some of the tech listings in Hong Kong. What do you think it's going to take in your mind for more institutional investment to come back into Hong Kong? Because it's trading sideways right now, and there's obviously still a lot of concerns, even if you're talking about mainland China and greater China like Hong Kong. Is there going to be a catalyst in your mind? Is something going to shift, or is it just going to be something that takes time? Maybe not this quarter, maybe in the quarters following.
Yes, I believe it has to be in Q2. I was in the States, in the last 3 weeks and talking to some of the global institutional investors. I think what you are seeing in terms of theme is in line with what the flow it is, in which when they invest in the China A shares, it's mostly domestic consumption play. The market expected about 12% consumption growth in China. I think some of the consumption growth in China will be rippled to the Hong Kong market, if you like. What we see in terms of catalysts we really need for the Hong Kong market is after the opening up, whether those consumption will be flowed to the Hong Kong market, and we need kind of like the service industry to be supportive. But last but not least, I think the Hong Kong internet company, all those big names listed in Hong Kong, right now is trading still at a deep discount. I believe not a lot of global investors are buying into the China reopening story yet. They're talking about it. So my view is for the Q2, if those earnings is coming back, the Asia market and the Hong Kong market will continue its rebound, if you like.
William, I've got to ask you, because we were just talking a little bit about consumption and what the Hong Kong government's doing. What did you make of what JD.com is allegedly or reportedly looking to be doing in terms of $1.5 billion to subsidise not only consumption on their platform, but to really challenge Pinduoduo, if that's indeed correct?
Yes, if you look at the major theme in China right now, is the second and third tier city and the rural area consumption. And Pinduoduo is, kind of like popular in the rural area, if you like. So I believe, the recent sell down is a good opportunity to market to screw up, this type of consumption play. If you look at the China market, I believe consumption is definitely positive, in terms of policy support. The second theme that we are interested, on the China market is potentially the rebound of the Asia market, which will benefit the security sectors, the brokerages, the asset management, and the wealth management sector. But I think for Pinduoduo, the subsidy makes sense, and at the end of the day, consumption is going to be a big theme, for the China market and Hong Kong market for this year.